Section 1. Introduction to GST. The Goods and Services Tax, or GST, is a comprehensive, multi-stage, and destination-based tax levied on the value addition at each stage of the supply chain, from manufacturing to final consumption. It is a significant reform in the Indian taxation system, replacing multiple indirect taxes levied by the central and state governments. GST aims to streamline the taxation structure, eliminate cascading taxes, and create a unified market across the country. This comprehensive tax impacts businesses of all sizes, from small retailers to large corporations, as well as professionals providing services. The implementation of GST has had a profound impact on businesses and professionals across India. It has brought about greater transparency in the taxation system, simplified tax compliance, and reduced the overall tax burden on many goods and services. For businesses, GST has necessitated a complete overhaul of their accounting and invoicing systems to comply with the new regulations. Moreover, it has led to a shift in business strategies as companies have had to adapt to the changing tax landscape and optimize their supply chains accordingly. Professionals, such as lawyers, doctors, and consultants, have also been significantly affected by GST. They are required to register under GST if their turnover exceeds the prescribed threshold limit. This has brought them under the ambit of GST, requiring them to charge GST on their services and file regular returns. While GST has simplified the tax structure, it has also increased compliance requirements for professionals, leading to a need for greater awareness and understanding of the regulations. In conclusion, the introduction of GST has had a far-reaching impact on businesses and professionals alike. While it has brought about greater transparency, efficiency, and ease of doing business, it has also necessitated significant adjustments in terms of tax compliance, accounting systems, and business strategies. Understanding the implications of GST is crucial for businesses and professionals to thrive in the new tax regime and leverage its benefits for growth and expansion. Section 2. Who needs to file GST returns? GST return filing is a crucial aspect of the GST regime in India. It is a mechanism through which registered businesses and individuals report their income, input tax credit availed, and taxes paid to the government. Understanding who is required to file GST returns is essential for ensuring compliance and avoiding penalties. Every business or individual registered under GST is mandated to file GST returns, regardless of whether they have conducted any business transactions during the return period. The frequency of filing GST returns depends on the type of business and its annual turnover. While some businesses may need to file monthly returns, others might have the option of filing quarterly returns. There are specific thresholds defined for businesses to determine their liability for GST registration and subsequent return filing. Businesses with an annual turnover exceeding the prescribed threshold limit are required to register under GST and file regular returns. The threshold limit varies depending on the nature of the business and the state in which it operates. Furthermore, certain categories of businesses and individuals are liable for GST filing regardless of their turnover. These include businesses engaged in interstate supply of goods or services, casual taxable persons, input service distributors, e-commerce operators, and those liable to pay tax under the reverse charge mechanism. It is essential to note that the GST Council may amend the thresholds and categories from time to time, so staying updated with the latest regulations is crucial. Section 3. Thresholds for GST registration. The GST Council has established specific turnover thresholds to determine which businesses are required to register under GST and consequently file returns. These thresholds are subject to change, so it's essential for businesses to stay informed about the current limits. Currently, the basic threshold limit for GST registration for most businesses across India is an annual turnover exceeding 20 lakhs. However, there are variations in this threshold based on the state and the nature of the business. For instance, some special category states, including northeastern states and hilly regions, have a lower threshold limit of 10 lakhs. This lower limit aims to encourage entrepreneurship and economic development in these regions. Moreover, businesses engaged in the supply of goods exclusively through e-commerce platforms are required to register under GST regardless of their turnover. It's important to note that this e-commerce exemption doesn't apply if the e-commerce platform itself is responsible for collecting and depositing the tax. Additionally, businesses involved in the supply of specific goods, such as ice cream, pan masala, and tobacco products, are required to register under GST irrespective of their turnover. This mandatory registration ensures that businesses dealing with potentially harmful or luxury goods contribute to the tax revenue. In conclusion, understanding the applicable GST registration threshold is crucial for businesses to ensure compliance with the law. Businesses must consider their state of operation, the nature of their business, and their projected annual turnover to determine their GST liability. Regularly checking for updates and clarifications from the GST Council can help businesses stay informed and avoid potential penalties. Section 4. Categories liable for GST filing. Beyond turnover thresholds, certain categories of businesses and individuals are mandated to register and file GST returns irrespective of their annual revenue. This ensures a wider tax net and addresses specific business models prevalent in the economy. One such category is businesses engaged in interstate supply of goods or services. Regardless of their turnover, conducting business across state borders necessitates GST registration and compliance. Casual taxable persons, defined as those participating in a temporary business activity for a limited period, also fall under this category. Event organizers, seasonal vendors, and exhibition participants, for example, must register and file GST returns for the duration of their operation, even if their overall turnover falls below the threshold. Similarly, input service distributors, ISDs, typically established by businesses with multiple branches, are required to register under GST. ISDs receive invoices for services utilized by their branches and distribute the credit of these services to their respective branches. This mechanism ensures proper accounting and distribution of input tax credit within a multi-unit organization. E-commerce operators, including platforms facilitating online sales and acting as intermediaries between buyers and sellers, are also mandated to register and file GST returns. This requirement ensures transparency and accountability within the rapidly growing e-commerce sector. Lastly, individuals or businesses liable to pay tax under the reverse charge mechanism must register and file GST returns. Under reverse charge, the liability to pay GST shifts from the supplier to the recipient of goods or services under specific circumstances. This mechanism primarily targets unregistered suppliers and ensures tax compliance across the supply chain. Section 5. Importance of timely GST filing. Timely filing of GST returns is crucial for maintaining compliance with the GST regulations and avoiding penalties. It ensures a steady flow of tax revenue to the government, which is essential for funding public services and infrastructure development. Furthermore, regular and accurate GST filing helps businesses maintain a clean compliance record, enhancing their credibility and reputation in the market. This is particularly important when seeking loans, attracting investors, or participating in government tenders. Timely GST filing enables businesses to claim input tax credit on their purchases, reducing their overall tax liability and improving their cash flow. By claiming the available input tax credit, businesses can offset their output tax liability, minimizing their tax burden and freeing up resources for other business operations. Moreover, consistent and accurate GST filing helps businesses track their sales and purchase transactions efficiently, providing valuable insights into their financial health. This data can be used to make informed business decisions, identify areas for improvement, and strategize for growth and expansion. Additionally, timely GST filing allows businesses to avoid unnecessary penalties and late fees, which can significantly impact their profitability. In conclusion, timely GST filing is not just a legal obligation, but also a smart business practice. It fosters a culture of compliance, enhances business credibility, optimizes tax benefits, and provides valuable financial insights. By adhering to GST deadlines and maintaining accurate records, businesses can streamline their operations, improve their financial standing, and contribute to the nation's economic growth.